Okay, we should be live. Good evening, everyone. Hope you're doing well. Let me know if everything looks clear and sounds acceptable. Not that I changed anything, but you never know. And then we can get going. Sup, hi QB, how you doing? Richard, Mo, Boogie, Dixie, of course. Louty, Brandor32, Dumbo, of course. Hello, hi. Hope everyone's doing well. I'm guessing that you can hear me and see my screen, so that's a good place to start. SZ is here as well. Isn't it strange how it's SZ if I'm being British, but because there's so many Americans who just interact with him, it's kind of become Trader SZ, even though no one says Z in the UK. Very strange. Greetings from Ghana. Greetings. Not from Ghana. Right, we can get going then, I reckon. First things first, thank you to Bybit for sponsoring Technical Roundup. If you want to support the show and keep it free and accessible and going, make sure to check out their links in the description below. Even clicking those helps us, so thank you to Bybit, and thank you for your support for making this happen as well. On the audience interaction front, if you can go ahead and like the video if you haven't already. Sounds like homework, but it does make a difference. Help us be more discoverable and maybe get some of the awful bits of crypto YouTube, make a dent in their empire. And lastly, subscribe if you haven't already, because sometimes we get shadow banned by weird stuff and don't come up on the homepage. So doing that will make sure you get all the notifications and other fun stuff. I'm going to make a very conscious effort to be better at answering questions and engaging with the chat, because sometimes these live streams turn into like monotonous rants, and they're very one way, even though they shouldn't be. So I'll do my best there. So feel free to throw in questions and do all that sort of stuff. I'm gonna run through Bitcoin and ETH first. It's one of those weeks where some weeks are really quite clear, not in terms of, well, this is going to happen, therefore that's it, that's the law. But by clear, I mean my expectations are reasonably well defined, and the areas we're trading in are reasonably well defined as well. So it just makes acting on the stuff that we lay out reasonably straightforward, and the level of conviction that's associated with those structures or whatever else it may be is quite high as well. Sometimes that isn't the case. This is one of those weeks where the market is just in a spot where I'm not hugely keen or don't want to build like a very cohesive and holistic picture across many time frames. So it's going to be one of those where we kind of pay attention to the monthly. The weekly is a bit of a wrap, and then the daily is going to be focused mostly on its own daily range. So we'll see what that looks like. DVD says, I'm going to counter trade whatever you say because you and Bearish Donald are 80% wrong. Awesome, man. Thanks for your attention anyway. Not sure where that statistic is pulled out from, but fantastic. Glad you're engaging with it nonetheless. Mo says, Cred, can I find an explanation on Fibonacci retracements anywhere? I think I've got a video on my channel, but there's also in the study guide, there's a section on fibs which is a bit more up to date, so go check that out. Rob says, hi Cred, everyone waiting for a 30% dump. What if it just keeps getting bought up? Now institutions are getting involved. That's certainly plausible. And again, there's been a profound absence of any sort of weakness, even down to the daily time frame at the moment. It's just everything's getting bought up. No real breaks in structure that have held up, and, this thing's been strong. So that's certainly possible. We're going to talk about some stuff to be aware of in case that isn't the case. So the monthly time frame is kind of tricky as ever, and I mean tricky as ever certainly when it comes to by the way, just before I forget, how great is this headline? Mother bear and cub shot after climbing onto Russian nuclear submarine. Like, I know the market's bullish, but I think executing bears in this kind of manner is just unnecessary. I mean, the market will take care of them if it's bullish. This seems quite over the top. Maybe that's just my opinion, but we shouldn't treat our fellow bears like that. They're just as important as the bulls, someone on the other side of your trade. Anyway, I thought that was a Interesting headline. Of course it happens in Russia. Like anything to do with a bear will of course take place there. Anyway, so the monthly time frame kind of remains unchanged if we are talking about the monthly closes at the very least. So we've had, this is still technically, until we get a monthly close above the level of resistance we have at around 14k. The close was at structure and we are currently above structure. Okay, so monthly close above this level would suggest a break and the move towards all-time high, but we've still got about 3 weeks left to sort this thing out and see where we close. A thing to be aware of, which we spoke about at 10.7, and also just in those months of price action at this level, is that a close above a structure doesn't mean that it never gets retested, right? So we had the close above 10.7, and we had the next candle, which closed above 10.7 but tested it, and then we had another candle, which was the deep retest candle, which went all the way to the structure, through it by about just under $1,000, and then you got our move higher. So I think it might be slightly different if we get the close through 14k, that at that point momentum just carries it north to the highs and higher. But it's certainly something to be aware of, that a close through resistance doesn't mean price is obligated to go in a straight line to the next level. At the very least, it could retest that structure and then put in the move. And just generally at these monthly levels, I mean, 10.7 again, a recent example of that. Even in a bullish trend, we'd still do tend to spend some time at these structures without necessarily teleporting through them. There are exceptions, as with anything, but just some considerations to be aware of. I think, as always, the monthly is just going to be clearer as the monthly close approaches. But even then, unless it's something like a full reversal and something bearish into or below 13.8, it'll probably be the same thing, that, you know, trending towards the highs, but could likely retest the level itself. I don't want to speculate too much. You know, I like to deal with what's in front of me versus a bunch of hypotheticals, but just some stuff to be aware of on the monthly time frame. The weekly is really the kind of slightly more ambiguous one, and I say that because we're reasonably far away from structure that I find personally compelling, or where I want to do business. So just kind of eyeballing this chart before we get all our levels on it. So really, what have we got before all-time high in terms of our reference points? We can come up with some quarterly levels or do whatever else. But for me, at least structurally, we really have this this consolidation here. Let me just circle it first before we go any further. Where's my pen? Yeah. So it's this multi-week consolidation here, which preceded, or was the first kind of range we had, or the last range, I should say, before the first big kind of breakdown in Bitcoin, and that was obviously a trend-forming breakdown as well. So we're kind of trading within this structure as well. Now, how to define it is another question. I think conservatively, and just being consistent, you can go for lowest close as the underside of the range, and then highest close as the top side of the range, right? I've seen some analysts do it another way around, which is totally fine. We just pretty much go for the wick high and then the wick lows. I think that's equally valid. Some have been extra generous and just literally drawn a box from the candle close in the wick to the candle close in the wick. Like, it really doesn't make any difference because we're dealing with the same structure, which is this pre-breakdown range or consolidation, right? One kind of tentative level that I've got added on my charts, which we'll see momentarily, is the midpoint between those two levels as well. That isn't perfect. I've just kind of eyeballed it, but I don't religiously put a midpoint on any sort of range or consolidation that I use, but I've found that whenever it's a high time frame consolidation and we have significant price differences between the range high and the range low, so this is what, like, I don't know, 14k to 15.8, you know, if you've got like a roughly 2k difference, or, you know, some significant percentage points, I've just found it to be generally not a waste of everyone's time to delineate the midpoint if there's such a big gap between the high and the low. But again, it's all happening within this structure, which isn't amazing. We didn't spend a ton of time here, so, you know, not a whole lot of volume was transacted within this time period. Certainly if you compare it to the recent breakout of like the 11, whatever, 12k range, delineated thusly, we're dealing with totally different structures here. right? So this is really, in terms of support, resistance, etc., I suppose the point I'm getting at is there are about 2-3 levels which I find reasonably interesting from the weekly time frame. One is the bottom of the range, which lands at around 13.8, 14k. And we know from the monthly time frame, a lot of stuff was going on at 14k as well. One is the top of the range, which is about 16.5 or 16.4k, which is just the mirror, the highest close, etc. And then probably the level that's closest to market, and it's kind of, we had the low of the week come in near that level, and it's kind of doing its job reasonably well on lower time frames, is, as you can imagine, just the midpoint of those two structures, which lands at around 15.2. But again, to me personally, they can't really hold a candle, no pun intended, well, kind of intended, I don't know, to this high time frame 12k whatever level that we have here. So any type of pullback from this structure, and again, that only would start to become compelling if we lose 14k, which is a kind of feat in itself, given we're currently above it and it's a monthly level. For me, this is an opportunity, given there's so much space between a loss of A and the next level of support at B. So on the bearish side, certainly if you're not a fan of just fading everything on the way up and hoping number goes up, which is risky in itself, I like to look at where there's space between a break of a key level and where the next significant structure falls. And for me, this on the weekly time frame is a reasonably good example of that. We have all the confluence in the world at around 14k, 13.8, 14k support, or currently support on the weekly time frame. And then if that fails, there's really nothing compelling between that and then the next level at around 12k. So if I want to be bearish and I want to have space and kind of a decent swing to catch with some sort of quote-unquote confirmation, or how I like to say, when there's more evidence for that type of positioning, for me it would be between 13.8. This is just a lot of empty space in my view to fill back towards 12 should the charts form in that sort of manner. Let me know if that makes sense so far, if you have any questions. The final point I want to make, which is somehow or somewhat related to all of this, is on the daily time frame. So two things I want to bring your attention to. One is kind of the immediate price action. While these high time frame levels have been acting quite well and they're useful for looking at lower time frame charts with those higher time frame anchors in mind, with price action like this, when we're kind of entering our first real consolidation, I don't really count this period because it was just a grind up. There was no moving sideways, no range boundaries being respected. Excuse the car outside. I've found it helpful to delineate this range again using the highest and lowest closes that we've had so far. So highest close, which is literally kind of the top of the range, and then lowest close, which is the bottom of the range. Support. Okay, resistance, support, levels. The market seems to like these value areas, and that's kind of where it's been punting about recently. So I think for recent price action, at least I always have a choice of just purely deferring to higher time frame levels and seeing how they look on the daily time frame, something like this, or looking at the daily time frame quote unquote in isolation and giving more weight to just daily structure over the higher time frame structure, no matter how it looks on the lower time frame. So usually it's a mixture of the two, right? I want to see what daily structure looks like and how it's forming around those higher time frame levels. On this occasion, it just seems reasonably clear to me to skew or give more weight towards daily structure itself, which is reasonably unambiguous in my view. Highest close resistance, lowest close support. So that's point number one about the daily time frame. The second point I'd like to make about the daily time frame is I don't perceive most of this kind of consolidation as support. So the structures that I like to trade when price forms a base is when you have a lot of volume transacted across, reasonably sideways, whatever that means, structure. So around the same price level, and, pretty much forming a base for a consolidation. So for example, just from a children's drawings point of view, I like stuff that looks like this, for example, right? And you've seen that a million times. And whether it breaks the upside or the downside doesn't matter. It's the structure within the consolidation and the form of the consolidation itself that I tend to find compelling and that works well as support and resistance, right? What works not as well is this type of structure where you have an impulsive move, but instead of price forming some sort of base or a range before breaking out and then giving that significance, it's these kind of staircasey, more ugly grinds up, which don't really form any structure and then melt higher. For me, these are cut up as easily as they're cut down, and they don't tend to be the most reliable levels in the world, just from personal observation. If I'm looking for a base or somewhere or an area which I think is higher probability, it has to have more kind of sideways characteristics rather than sloping characteristics. Don't know if that makes any sense to anyone. If it doesn't, of course, let me know. Let me see if there are any questions so far. Oh yeah, and the final point I want to make about the daily time frame is, again, what would be a valid indication of weakness? I mean, market structure break, sure, but at the very least, I mean, look, this trend has been absolutely relentless. So I think the first sign of weakness would come in the form of a lower low close on the daily time frame. So taking our range into account, I think if we break the first sign of weakness, be a break to the downside of this consolidation, which is that level we talked about. If that makes a lower low close, I'd be reasonably keen to sell rallies back into the range, ideally into the lower side. And then objectives would be the monthly level at around 13.8. Again, as much as I'd love to ignore this because it's one of those crappy structures, I think as a first trouble area, 13.8 is probably reasonable, certainly on intraday timeframes. And then the more kind of 12k-ish area that we talked about on the weekly time frame. But again, that's a hypothetical. Why? Because there's no evidence of such weakness in the market right now and with the candles that we have available. Okay, so that's the final point to make about the daily time frame. And now if we finally add our levels, we can kind of see... I'll answer all these questions at the moment. Thank you for engaging as ever. Like the video if you've learned something or not, or if you find my voice annoying. That'll be good feedback as well. Yeah, if we add our levels to this chart, the ones which come from all the high time frames, you can kind of see how the market's mapped for me. I don't know where this comes from. Oh yeah, I know. This is like an intraday level. I might get rid of it. Let me see. Yeah. I'll keep it. Whatever. Hold on. Let me fix this up. Nope. Okay. So if we take a slightly lower time frame view of these higher time frame structures, you can kind of see where the space is at and where we are relative to what the high time frame charts may be looking at. So we talked about 13.8, 13.9, and you can just see there's a lot of stuff going on there structurally. There's a confluence, I think the cool kids call it nowadays. We've got previous month's high or previous week's high at around 14k. We've got the monthly open and of course the monthly level itself all landing around there. So for me, any kind of daily market structure break that we talked about, this kind of up move will probably get filled back into an area which actually looks like technical structure, or where more volume was transacted, whatever parameters or criteria you'd like to use. So that's kind of a lower time frame view of the daily time frame stuff. In terms of where the market is right now, we're kind of chopping or oscillating around that weekly midpoint that we talked about. So within that weekly lowest close and highest close, the midpoint lands at around 15k. If we have continued strength, so no lower low closes on the daily time frame, so the bearish scenario just has no legs, then pretty straightforwardly, I'd expect to move through the weekly open, which would suggest a kind of low in for the week to some extent, given we've tested high time frame support, and then a move towards / through the next level at 16.1. So again, just to quickly recap where those weekly range boundaries are. I'm going to make them in blue, just so we know where we are right now. So this is weekly range high. This is the weekly midpoint. And then because there's confluence, I didn't label it twice. I think around here, although, you know, it's basically aligned just under 14k, is the weekly range low. Okay, so with where we are right now, the midpoint is currently acting as support. Unless it fails, that suggests continuation higher. If I get a very specific daily breakdown lower low close, that'd be the first sign of weakness, like literally on this whole way up. So I'd take that quite seriously. And I think that's a point worth making. If something is intact the whole way up, or for a significant portion of a trend, or for just for a long time, and then it breaks, yes, that could be a fake out, but it's also the first real signal that's worth taking seriously. So if on the way up the daily time frame has shown 0 breaks in market structure and it's been a straight line up, if that then changes and we do get a daily break in market structure, that in itself, that shift in behavior, I think, is a good reason to start taking pullback seriously, right? So if that happens and we see that shift in behavior, which hasn't materialized yet, that would be coming from the midpoint towards the bottom of the range, with all this fun stuff happening at 13.8, 14k. But for the time being, yeah, that's where we're at. No signs of weakness yet. If weekly mids act as support, the really short-term trouble area is the weekly open at, my eyes can't see, 15.5, and then probably some sort of overextension through the top of the range. That sign of weakness that I keep talking about, as described, would be a daily lower low close, which would look something like this, right? So this is our lowest close in the range, and again, you can see the whole way up, the daily lowest low closes, they're all holding. No fake outs. This thing wasn't fucking around, right? Certainly between trends. If I get that sort of breakdown, so the candle, for example, just looks like this, or whatever, I would then pretty much delineate this area as resistance, lowest close, highest close resistance, and then look to sell a rally into there with an objective of 13.8k. But until that happens, I'm just going to assume that we're going to bounce from the midpoint and trade higher, right? Because I need to see some sort of evidence in a trend like this. And I think this is something we talked about on Monday, right? Where we basically said, yes, we're reaching high time frame resistance at 14k, whatever, mid 14k, and all this sort of fun stuff. However, despite the market being at resistance, there's no evidence that anyone wants to sell it, right? Market structure intact the whole way, everything looks uber bullish. So if you don't have evidence of alignment, again, which is when lower time frames reflect the weakness or the strength that you'd expect from higher time frames, if you don't have alignment, you need to play pretty damn conservatively. And that's been, I think, the name of the game, as well as just lower time frame technicals behaving pretty well generally. That's been where my intention has been, at the very least. Apart from that spot sell, or portion of spot sell at 15.2. Does that make sense? Is that helpful? Let me go through your questions now. 11.5, lots of comments about 11.5. If we pull back to 11.5, I think it's worth a punt at least on an intraday time frame, because it's pretty much like at that point the better/best level on the chart in terms of pullback support. And I think if 11.5 doesn't hold on a pullback, we go much lower. So I really like do or die levels, because you get big moves on high time frames, low time frames, and they're generally really key invalidation points. So the cool thing about having high impact invalidation points is that if you're wrong, you're not buying lower for a long time, right? So Yorgos says, press like button, it's free. I agree, the like button is free. We're almost at 100. Thank you for all the support. Back to the point, the whole point of doing business around do or die, whatever type of levels, is that if you've correctly identified such an area, and let's say this is your support, and you choose to buy it, right? If it gets invalidated, you know that that's in itself a key signal in the market of some sort of trend shift, turning point, or a deeper correction. So it's not like you trade this level, it gets invalidated, and then you're suddenly trading like the next one here, and then the next one here, and then the next one here. That's not how it works, right? Like you have a level here, which is your do or die big boy, and if that fails, you're like, okay, this market's absolutely screwed, so I'm going to wait until we reach the next high time frame level, which may be all the way down here. So first of all, that saves you from knife catching shitty levels, which you'll lose your money, most likely lose your money trading. But second of all, best case scenario, it could also let you flip bias and say, well, best level of support has failed, so I'm going to sell until the next reasonable level of support, and I'm assuming that these levels in the middle are just going to be fodder and not very reliable. I think this is something people get wrong a lot with regard to level selection. at a certain point, you need to have some sort of hierarchy in your mind, or make a judgment call about the type of structures that are worth trading and the type which are worth ignoring, right? Or at the very least, levels that will bounce price versus levels that will reverse price. So a good example, just I guess psychologically, like if Bitcoin, 6K support that we had here, for example. So this is like the absolutely unequivocally the best level on the chart, right? If 6K is broken, would you then bid 5.8, 5.7, 5.5? Probably not, right? You're like, oh my god, are you kidding? 6K break, best level on the chart ever. I'm not going to be bidding $200 or $300-$400 below such a key turning point in the market, right? Or the same can be said for 11K resistance that we had recently, right? When you get the break of 11K, are you going to start fading at 12.1, 12.6, I don't know, 12.8, whereas the next big level will be all the way at, say, 14, right? So when these big levels break, they themselves are a kind of signal to either get out the way or flip bias. That's the whole point of doing business at these big levels. So for me, in terms of all the commentary going on about 11.5, it works very much in the same way. That is probably, at the moment, the best weekly structure on the chart that we have below us. So if that's not enough for a dip, right, and for some sort of higher low, because there are also market structure considerations here, right? We made a low from the mid 10K retest. We've now made a higher high, right? If we pull back and start looking for a higher low, ideally it needs to happen, well, higher than the previous low. So this is 10.7, support resistance flip. Pretty much the best, and in my view, only real candidate for a higher low is at the 11.5K level. So if that were to fail, I mean, holy shit, at that point, one, the best level for a pullback has failed. And also, you will have a weekly market structure break because as a result of 11.5 failing, you've also failed to make a higher low, and you will have most likely made a lower low at that point as well. And given all of that, I wouldn't be fading the kind of move, and I'd expect it to go significantly lower or whatever. That's not the point. This isn't like market analysis that this was going to happen. I'm just using it for an example, like to demonstrate the concept, which is that some levels matter more than others, right? Some levels matter more than others, both in terms of bet size, how much you risk at those levels, their significance, where you look to take profit versus, everything. Some levels just simply matter way more than others, and 11.5 is one such structure. Like, another thought experiment way of going about it, let's say you have hourly support that breaks. How much are you going to expect from an hourly support break? I don't know, let's say a 2 to 4% move, for example. Okay, fine, that's reasonable. Let's say you have monthly support break. How much are you going to expect from that? Are you going to expect the same 2-4% on a monthly support break that you expected on an hourly support break? Of course not, right? You're like, monthly support is probably going to take us to the next monthly level. So that's going to be a bigger move than just like an hourly to an hourly. So not all levels are made equal, and it's always kind of context and a million other things which inform how much weight to give to those types of structures. Like, you see people get it wrong a lot, and I've been on the wrong side of this a ton. And it's very hard to do in the moment, but something to be aware of. Like, you'll have it that you have like an hourly trend line, and the hourly trend line breaks, and someone will post a chart which looks like risk reward wise. Hold on, let me get rid of this for a moment. So you have like an hourly trend line which breaks. Go away. And you'll see charts like on Twitter and stuff, which literally look like this, right? So it's just one hourly trend line. It's not like the end of the world. Why is this? Hold on. This is becoming painful. Oh, for fuck's sake. Whatever, let's just do it. So literally, you'll have hourly uptrend, whatever, boom, that's quite steep, whatever. The level fails, and then from the risk reward tool, you'll have, yeah, I'm going to sell here, my stop loss is going to be here, and then my take profit is going to be all the way down here. It's like, what the fuck are you doing? Why is that reasonable? Why, do you have a good reason to believe that this hourly or lower time frame trendline break is going to lead to like a 40%, 30% pullback? I mean, maybe if you're a genius, or maybe if there's some sort of confluence going on at this hourly structure, which gives it higher time frame significance, but generally, the move you expect should have some sort of bearing or basis on the time frame on which it is happening, right? In the same way, let's say you have like a weekly level of resistance, right? And then that level gets broken, and then your you know, you enter on let's say the retest, but then your take profit is like $10 higher and your stop is just below the level, and that's because there's like an hourly level here. It's like, hold on, we've just had a weekly break of resistance and you're playing it to the next hourly level. Why? Right? It doesn't make sense. If you have such a high time frame break, you generally expect the high time frame participants to step in and for there to be a lot of space until the market reaches resistance or cools off. In the same way, if you get a low time frame break, you can't expect the world to roll over and for the whole thing to be over. So it's about kind of being reasonable and tailoring your expectations. Okay, let me look at the chat. Let me also open a window. One sec. Okay. Right. What have I missed? 107 likes. Love you guys. Thank you. Looking like a snack as always. Yeah, absolutely. Would you compare 11.5k down to 6k up? I'm not sure it's easy to make comparisons like that. So I don't know is the answer there. It seems more like a double top formation on what time frame? I generally don't trade patterns in a vacuum. If we are truly in a bull market, would you want the 11.5 to hold if it gets there, Cred? Yes. Where does the bull scenario fail? I think trouble in paradise if we pull back to 11.5 and it fails. I think that would probably take us to through 10k and to kind of lower levels. I mean, on a level-to-level basis, yes, if we have 11.5, your FTA is like 10.7, mid 10k. But I think if this fails, that's likely a sign of trend reversal, which will take us to the next monthly at 8, something like that. If you get this, if 10.5 fails. So yeah, for me, for a sustained, fast, I shouldn't even say sustained, for a fast-moving uptrend, I'd need to see 11.5k hold and a pullback. If the best technical level on the chart fails and you want me to still be bullish, I guess we have different methodologies or whatever. And again, I'm more kind of a structure and levels trader than I am a trend trader per se. So I need, if the market's bullish, it should have no reason not to get bid at fantastic pullback levels, right? What's the bullish scenario, Brendan? The bullish scenario is the market just, well, there are a couple. One is just the market just continues to go straight up, right? The second one is a pullback to high time frame support, which gets bid and goes to make a higher high. And for me, this pullback level, ideally, the A+ candidate for that is at 11.5k, and the kind of B- candidate for that, just in my personal view, is 14k. So this is the kind of shallow, I'd be uncomfortable, but still technically valid pullback candidate. This would be slightly better rated if it happens after a monthly close above resistance. But in terms of like the big boy trend test pullbacks, it'd be 11.5. So bullish scenario, number just continues to go up. And again, there's no indication of weakness at the moment either. So that's something to contend with and be aware of. And number 2 is a high time frame pullback that holds, where 11.5 ideally, 14k kind of good enough. Does that answer your question? Hope it does. It would, guys, if you're asking questions about like timeframes and stuff or patterns, just let me know what time frame you're looking at, like hourly, double top, or 4-hour, daily, weekly, so I can kind of have a look, because it's not always easy when we're jumping between timeframes. Multi-illusion says, noob question, when Bitcoin falls heavily, what do you do to keep value? Swap to USDT, open short? It really depends. If I really think the market is going to like topped or going to take a huge dump, yeah, you either stable coins or typically a one-time short position on an inverse futures platform or contract rather, which allows you to lock in a value per Bitcoin. But yeah, either tethered or inverse futures. I mean, shorts if I'm on board, yeah, but I don't kind of just naked short, for example, to hedge or do any of that. It's either, if I short, it's either for a trade or for the specific purpose on an inverse future of locking in a value per Bitcoin. But yeah, I don't mean to answer the question the stupid way, which is, oh, if the market's bearish, just short. I mean, how useless is that? Oh, everyone's saying 4-hour time frame for the double top. I don't know. I don't know is the answer there. I mean, if we look at the daily time frame, hold on, that daily range that we talked about, if we take that and add it to the chart quite literally, so with the highest close, oh, go away. Highest close, lowest close, and then we click on the 4 hour, we more or less get the top and the bottom. So I mean, double top as far as support and resistance, kind of sure, but it's not the type of thing where I see, okay, it's a double top, therefore I'm gonna short. I don't quite trade patterns in that fashion. I don't know what Teresa's saying, but I'm not sure it's entirely relevant. Yeah. Also, in terms of ascending triangles, you'll have to wait for Wednesday, because that's like the Duck's #1 pattern ever in the world. It's really his cup of tea, these ascending triangle fake outs, breakouts, whatever. Danny says, a touch of philosophy, but how far do you agree with bull markets are built on doubt and bear markets are built on hope? Pullbacks are scary but helpful for the market to go higher. I don't know. I generally just try to avoid kind of trading wisdom unless it's something I've experienced personally. I don't really know what these markets are built on. Bull markets are built on higher highs, higher lows. Bear markets are built on lower highs, lower lows. That's probably be the most philosophical I'll get when it comes to these things. So yeah, I'm not too good for quotes and stuff like that. I'm just reading the chat as well. I'm just going to slow down the pace of these live streams a bit, and I'd love to get your feedback. Because honestly, a lot of the time it just feels like I'm rushing through to get all the charts done, all the whatever teaching done, and then I check the chat at the very end, whereas I kind of want to slow down, take breaks, take pauses, and, you know, make it a bit more human. Are you yourself long or short or out? Currently flat, and I sold some spot around 15.2k. So that's me. No human, please. No time. Talk faster. Your voice is annoying. I agree. I can't listen to any playbacks or feedbacks, whatever. In short term, which are the levels you're watching? Pretty much the ones you see on the chart, mate. I should probably add the ones we discussed as well, just for posterity's sake. Daily highest close. Daily lowest close. I haven't checked ETH yet, Max, so you are lucky. Roundax says, why didn't the consolidation around 15.4k didn't act as resistance? Oh, you mean this? I think you mean this. 2 points. Well, a few points. One is that with lower time frame technicals, especially intraday stuff, it just won't always work. That's point number one. It just won't always work. There's no more depth or nuance to that. Point number two is you can see, and two and I guess three are kind of related. Around high volatility, kind of, you know, volatility inducing news or just events, you may see technical levels disrespected in the short term, right? As liquidity providers will widen spreads and or pull liquidity. So they don't get run over, depending on how people are trading into them and the news itself and the nature of the event, etc. You may see technical structures disrespected in the short term. And I guess the third point, which links to the second one, is it could still end up being valid resistance. This could be the overshoot portion, and the level could end up doing its job. So we don't really know. But yeah, just I think points 1 and 2 are particularly important. One is just they don't always work. Number two, especially when the seeming or apparent invalidation of the technical structure happens around a news event, for reasons stated with regard to what liquidity providers do in those periods, that may serve as a little bit of an explanation as to why things aren't always clean. Yeah, and as Danny says, that third point could still end up acting as resistance. It doesn't look like it's over. Just to be clear, with regard to when is a level washed, you'll see stuff like, and I'm not calling anyone out or whatever. It's not a dig at Roundnack by any means. It's a very good question. You'll see stuff like this where it acts as really clear resistance, right? Or at least there's evidence of resistance, and then it breaks out, closes above it, looks really impulsive, and then closes below it and looks really impulsive. And then the argument on the close of, let's say, the second violation through it is that, oh, well, the level's washed because we closed above it and it didn't go higher, but then we closed below it, didn't go lower, so, you know, the level's washed. For me, these types of candles around structure aren't really what invalidates a structure. There needs to be more time, right? And for me specifically, a level washed isn't one that has extremes occurring above and below it. It's actually almost the opposite, where price just doesn't give a fuck, excuse my French, about the level itself. So this type of structure where it's just chopping both ways, there's no volatility, there's no bounce in either direction, no price sensitivity, whatever you want to call it, like this type of stuff is much more compelling evidence of a level being washed rather than these kind of short-term events through structure. Now again, perhaps more importantly, this isn't the most kind of significant level in the world, and we know there's some more interesting stuff from higher time frames, kind of above market and below market, but purely on that point, I'm generally quite careful of dismissing levels as not working or not being respected, etc. In the short term. I really need to see the market not give a crap either way, and then I'll be more likely to concede, if you will. Kunal says clean double close, who knows? Yeah, very much could be. Would you go long if we go above 15.9k? It's unlikely that I break out long that. And the reason is, not 15.9. There could be a trade, I think, depending on how it sets up, from the daily highest close, 15.6, towards the next weekly level at 16.1, right? So I don't know, just like a rough diagram example. It'll never look like this in a million years, but, you know, whatever. Daily break of that level, retest, 15.6 towards 16.1. So that's a bit more reasonable, and that would suggest the break from the daily range and the move towards the top of the weekly range. The reason I wouldn't break out long 15.9 is because I've got resistance at 16.1, right? So I'd end up pretty much breakout buying into an area of high time frame resistance, which is only like $200, $250 higher, which isn't, I can't see that really setting up as a fantastic trade unless something really changes. Adele says, percentage-wise, how much of your net worth did you allocate to your hold position as opposed to your trading capital? Good question. I'm much more skewed right now towards trading capital rather than hold position. Полиция, да, менты подъехали. Все, конец. Узнали, что я без KYC. What do you recommend for capital preservation after big wins? I'll answer this question and then we'll get back to some charts. That's a very good question. For capital preservation after big wins, I like to think that what I'll do anyway is pretty much change nothing, right? And that sounds counterintuitive. And generally, I think a big win and a win streak are two different things. So if I'm on a win streak, I will just take more trades. I won't up my risk on those trades, which is what some people suggest. I can't really agree with that. But I'll take more trades and trade more frequently and trade lower time frames. Like if I'm feeling hot, I want to be in the market, right? If it's a specific big win, like a big winning trade, I'll not really change anything. Especially if it's kind of high time frame oriented, I'll probably, if anything, take a break and kind of reassess where the market is now that it's moved from one level to the next, because that's what most of my trades look like. That's kind of my personal approach. Win streaks, I trade more, usually with the same risk. If it's a big winner, not change anything, but usually I'll end up chilling out a bit anyway, because if it's a big winner, there's a good chance that the market has shifted a lot from one high time frame area to another high time frame area, and as a result of that, kind of a secondary effect of that, I'll probably take a step back and see what's up. Does that make sense? ETH is a tricky one. I say that. The levels have been absolutely glorious. Absolutely glorious. I don't know how you guys listen to this. Maybe I should just add text to whatever, give you subtitles. It's just fucking hell. Anyway, or just do these in Russian. Maybe that's easier. So we have the same dilemma of sorts, if you will, on the monthly time frame, or just in this instrument, whereby the monthly close was ugly, right? Closed below the level as resistance, and then there has been no alignment from lower time frames because all of them have just kept pushing higher following the monthly close, right? So where does that leave us? Let me quickly read this question by Matt. Hey, Craig, it seems that most traders' journey starts with all the tools and indicators, but then come back to the horizontal level. Do you think new traders should just focus on horizontal level and trend or other? I think you're right that it usually ends up being... I didn't even think it's about levels and indicators or whatever. I think it's just a trend towards simplicity, right? And whether it's simple for you using, 4 indicators versus 8, I think all successful trading systems will generally trend towards being more simple for their user. Actionability, clear invalidation, clear criteria for trading, etc., etc. So I don't really think it's as much a question of indicators versus no indicators. I think it's more a question of actionability and complexity of one's trading system. Like, how clearly can you identify opportunities? How quickly can you act on them? How much does your system actually help you trade? And if you're starting off and you've got levels, horizontals, different moving averages, clouds, indicators, etc., there's a good chance there's more noise than signal there, and it's very hard to come to a coherent trade idea. And as you kind of strip things down to first principles, you're left with fewer tools, but which actually do more for you in the form of actionable signals or feedback. Putting on No Pagadi after the stream, yeah, for sure. So ETH, yeah, the monthly has had no love, right? The monthly close is bearish, but it was... The lower time frames, frankly, don't care. Why is this? Okay. And the lower time frames don't care, okay? Now, the weekly is kind of where I'm split when it comes to ETH, because it risks looking giga bullish, but there's some structure which makes me a little bit unsure. So, what's the argument for ETH looking giga bullish? Well, as you'll recall, for a while now, we've paid a lot of attention to basically some version or not of this consolidation here. Why is it important? Well, in typical kind of trading fashion, when you have a consolidation that leads to an impulse move down, right, especially on high time frames and a significant one like this, like the real volatility expansion, the consolidation itself ends up being a useful technical structure as either support resistance within the range, so the upper boundary and the lower boundary, as kind of dynamic, not really dynamic, but whatever, support resistance levels, and then the whole structure itself useful for directional bias. So just looking at this, the developments couldn't really be more bullish. Why? Well, look, we had one close within the range, acted as support, so that's good. That suggests price moving towards the top side of the range. But now, the past couple of weekly closes, well, the last weekly close and where we are now, granted it's Monday, so God knows what this looks like. If anything, I think it's likely we wick a little bit deeper into structure, but that's just me speculating off the bat. This entire resistance structure has basically been engulfed, right? Like this. That's literally what it looks like in terms of how the chart is set up. You have resistance, market comes into it, closes within it, bounces at the range low, and then closes above, and boom. Like, you are here, right? This is where we are, like, right now. So, structurally, with regard, if you have, like, a kind of recency bias, which is totally reasonable, this market looks really good. Viewing it from a range point of view, we've reclaimed, English is hard, the range low, closed above the top of the range, and are using its upper boundary as support. So that looks good, right? And higher high close, all you want. So far. The only thing making me reluctant, and again, when I'm slightly more certain, I'll let you know. When I'm slightly less certain, I'll let you know. I'm generally pretty humble in my thoughts and very flexible with where the market is, levels, etc. I try to avoid speaking in certainties because I don't bet in certainties. If I were certain, I'd just take 100% risk every trade and just say what's up. I don't do that. But what's making me uncertain about that fantastic looking diagram, and again, this could be cope, but there are two things. One is still, given we're, you know, a few days into the month, I think it's the 9th today, right? 9th. Factor number one is that the monthly close are still rough. So any business that's done above that level risks being the monthly wick. This is kind of a background consideration. And again, I can't give this too much weight, because if the monthly close is shitty and then everything else starts flying, you can miss out on a whole month of trend just because you were like, oh, well, the monthly close is in the other direction. Like, it doesn't matter. If your monthly close is correct, you'll get some sort of alignment sooner rather than later. So that's the first thing. The second thing is more technical. Like, let's say this breakout is valid. If I look to the left of where we are now, we fall within this cluster or this consolidation here. Okay, which was, again, impulse, consolidate, impulse before the all-time high. You have a support resistance flip, and then this was the origin of the ETH bear market as well. So potentially it could be setting up for a very unpleasant scenario whereby we get a lower time frame breakout from the range that we've been in for the last couple months, as discussed in the diagram, but that breakout takes us into a separate resistance structure. Here. Do you see what I mean? It's like, oh yay, let's cheer for this weekly breakout above structure. Oh my god, I just bought resistance on that breakout and now the market's at $77, right? That last bit is obvious bullshit, but that's kind of what I'm wrestling with at the moment. And it's a difficult question which I don't think has any easy answers, right? So do I, whatever, give more weight to the recent breakout and basically ignore this blue resistance and, you know, send it, or defer to the blue resistance and see this as likely a breakout into resistance following a bearish monthly close, thus setting up for a good trap type of scenario? And I think both of those are really quite valid. Honestly, I don't know which one I'd pick at this stage. They're both equally valid. Argument 1, this is just a reclaim of this consolidation. Absolutely send it. Argument 2, yes, it's a breakout, but it's breaking out into resistance. You absolute mongrel, right? Wait, am I allowed to say that? Is that a really bad word? Sometimes my English is bad and I forget which words carry what moral connotations. Is mongrel a bad? Oh god, whatever, I've said it twice now. Anyway, so that's kind of my dilemma with ETH. I don't think it's particularly easily resolved in that regard. So it's one of those where if the monthly time frame moves, before I depart, I will tell you this is complete bollocks. Thank you very much. Goodbye. You won't be missed, I can assure you of that. Right. Unfortunately, the market is at one of those... Okay, it's not a bad word. Mongrels in disbelief. Goodness me. So it's one of those things where if you take that long setup and it moons, you'll be like, oh, well, of course it's going to moon. We have this weekly reclaim. At the same time, if you take the setup and it takes a massive shit, you'll look like on the monthly, on the weekly, and be like, ah, right, that was obviously the top. And I really don't like that sort of ambiguity. Generally, if I take swing trades or high time frame trades where there's a lot of space between levels, if I'm wrong, I like to be like, holy shit, the market really looks different from what I thought it should look, right? Those types of high conviction bets are usually those where you can't see the market looking otherwise, or at least it's far less likely than the alternative. And for me, if I can make like a very reasonable and equally compelling, almost indistinguishable case between buying the weekly breakout and selling the weekly breakout, I'm probably just going to do business further away from the level. That's the kind of high time frame overview. What I will say about ETH, 2 further points which will bring some clarity and maybe something useful derived from lower time frames. One is that I think we can do the same as we did for Bitcoin, which is highest close support, resistance, lowest close support within the range. So that's good, right? And at the moment, it's just like a consolidation after an impulsive move higher. So nothing bearish yet, but I think the same rules apply. Any lower low close in this thing will probably be some sort of rally to sell into, and that's where the difficult thing comes into it. I think your first trouble area kind of has to be the last high before the breakout, which lands at around 415. To get really bearish this, market structure would have to shift, and it just hasn't at the moment. This has been a very clear story of higher highs and higher lows. So the late bearish case would look something like that. Okay? So just to summarize ETH, monthly/weekly, I don't really know. Weekly in itself, like monthly close bearish, but like it's too early to tell. Weekly, like in terms of short-term structure, closed very positively. In terms of where it could break out into, it could break out into resistance and be an amazing top setup. So I just simply don't know, and I won't insult your intelligence by pretending otherwise. Okay? If I have low conviction, I've got low conviction. Daily time frame, at the moment, is fine. Its market structures, higher highs and higher lows, pretty undeniably bullish. I think we've got a short-term range, highest close, lowest close. If the bottom of the range fails, there's probably a seller rally type of scenario towards 410. That'd just be a kind of a level-to-level trade, really not much meat on the bone, and any reclaim type of nonsense would invalidate the idea. For high time frame bearishness and kind of evidence of alignment from the monthly time frame, etc., we need at least a daily break in market structure, and that would require a lower low. There's nice support at 370, 380. That's where the higher high came from, and the same kind of block or range was used as the higher low, which sent us here. So if that fails, that's later, right? It's a delayed sell, but you know the probability goes up. That's kind of the trade-off you make. You either have more confirmation and a later entry, or less confirmation and an earlier entry, for the most part, with exceptions, right? So if you're on the one side of that spectrum, which favors more confirmation but not as early, this type of setup where we get the lower low on the daily time frame and resistance at 370, 380, that'd probably be the one to take us into at least these lows, if not closer to the monthly level at 280, 290. Does that make sense? How do you manage leverage? I mean, you stick with the same or decide by how certain you are. No, it's not really leverage that plays a part in that. As Kunal has kindly said, there is an article that I wrote on Medium, which is a comprehensive guide to position sizing and leverage. And it's really the position sizing and how much you're risking of your account on a trade that's the important variable, rather than the leverage used to achieve that position size, right? Thoughts on WIFI? Also, like the video if you've learned something so far. Or if you're not one of those trolls who comes in and says, this is absolute bollocks, and leaves. Fucking weirdos, man. Swear down. Right. This is really interesting. There's a crazy squeeze on WIFI, but at the moment, it hasn't really changed much structurally. Also, there's a cool TR logo in the top right corner. If you hover over that, I swear to God, try it. And click subscribe. That'll help the channel out a lot and also make me feel good, because that took me much longer than I would like to admit. That little TR logo and subscription conversion thing. Would love that. Anyway, WIFI. So it looked really bad because there's pretty much the one structure that it had as high time frame support. 15.1 and 12.3, 12.4, right? And it kind of just ranged here and then broke down. And then when this, around these couple of days, and I was expecting the market to just float back into this consolidation and, you know, just basically fill in most of this. It didn't. There was a big kind of on-chain short that was telegraphed, you know, just like kind of the Zeus Capital link thing. And so they got squeezed. And there was like a whole lot of buying, kind of really coordinated buying to squeeze that short position out of its position or towards its liquidation. That squeeze ended up through these highs, crazy couple of days of price action. But in terms of structure, not much has changed. This is technically, until proven otherwise, a bearish retest of the upper boundary. So to get bullish WIFI, if I want to see evidence that a low is in, it would have to be... My less preferred setup would be something like this, right? Through 15 ones into 22 ones. So you can see we're having resistance here at the moment. If that flips, there's probably some sort of play to fill in that gap. And again, it's nothing to shake a stick at, given we are dealing with, you know, like a 40% move there. Plenty of meat to... Meat? Gosh, what am I even talking about? Plenty of ground to cover on a move like that. If I want to see evidence that there's a bottom in this market, on any sort of pullback from resistance. I think if we're dealing within this range as we were previously, I think it's reasonable to want or expect the range low to hold. So the kind of pullback, do or die bounce level for me is 12,380. If it falls back out of this range as well, that would just suggest that the short squeeze is over and we keep floating back towards that fill we talked about. If you don't mind waiting and you're one of those late entry, high probability type of people, which I think is cool as well, instead of taking the kind of 15 to 22 flip, which might be a bit hard or might not set up at all, if you don't mind waiting, something price reclaiming the old range back at 22k, that will probably be really strong. Something like this in a very similar fashion. This is kind of the range breakdown which led to the bear market kind of in the first place. So getting back above there would be a very strong sign. And there's also, in a similar fashion, an A to B move to be played in that instance, which is, again, slightly higher, 55% move, should that materialize. Final thing about WIFI is it's probably one of the more liquid. I mean, it's been churning through a ton of volume, right? I think Binance Futures on FTX, etc. So if you're just into intraday punting, this thing is totally reasonable for those purposes as well. But yeah, high time frame sort of view, do or die bounce at the lows at 12.3, right? That's kind of the level that really has to hold for this thing to stay within this range and or higher. And the kind of momentum continuation entries are like this or through here. But for now, we have this squeeze and it's kind of just moving at the top side of the range. Nothing too attractive immediately, okay? Link actually tested one of the levels that we spoke about. How do you know if it's a fake out or if it's coming back for a retest? You don't. You don't know. And also depends retest of what. What do you mean? But generally, there's no way to know that per se. I think the link setup that we discussed is still valid as ever. And if anything, had kind of, I guess, confirmation of sorts that the structure that we had as our reference point is important because it's been acting as resistance, specifically its lower boundary. Again, you have impulse, consolidate, impulse, acts as support resistance. We have resistance at the lower half, resistance at the lower half, resistance at the lower half. So the higher probability trade is to clear this area through the upper boundary, and then I think you get a real momentum push towards, I mean, God knows. Really, I think the high at that point is vulnerable, but we could also just be a bit conservative and take the pre-all-time high cluster here as well. But anything into 12.13, unless it breaks it, is a bearish retest until proven otherwise. But I'd certainly be cautious with this because market structure has been absolutely relentless on this with the higher highs and higher lows. Okay, so resistance, good kind of profit-taking level, whatever, for longs to either add or get into fresh ones. I think breaking the upper boundary of this cluster, the range high at 13.8, there's really nothing within here that really jumps out at me as, yeah, that's fantastic resistance until the decent enough level at 17. So again, just measuring that, how much room to capture, even with like an imperfect entry, more or less. That's kind of 20-25% on that sort of flip. So even catching half of that can certainly be plenty. Cred, as a rule of thumb, is consolidation at resistance bullish, support bearish? It depends. And others say it's a price acceptance. Other refers to it as technical structure doing a job. God, yeah, it's one of the tougher questions. I will answer it. In terms of software for the drawing on the screen, light shot. So, okay, let's answer this. So consolidation at support/resistance. I think where most people get it wrong is losing sense of time frames. So let's say you've got a daily level, and here's that daily level, and you're watching the hourly time frame. Daily level. You're on the hourly time frame. Price comes into the level and just starts consolidating, right? You'll have a ton of analysts who will look at this, traders, whatever, right? Just market commentators, speculators, and they'll identify this as a level of support, right? And this as consolidation, and therefore say that it's bearish. But of course, you and I know that that's bullshit because you are judging the veracity or ascertaining the veracity of a daily level using the hourly time frame, which is typically really risky. Like, price can spend 2 or 3 days at this level before it does its job and reverses, which will have been, you know, dozens and dozens of hourly candles. So I think with consolidation at resistance or consolidation at support, the first thing to do is to make sure your timeframes are matched, at least to some sort of reasonable extent. If your timeframes aren't matched, then most of the analysis about consolidation, this, here, there, everywhere, is bullshit. It's just not compelling enough. The other point I'll make about that rule of thumb is it's important to look at market structure coming into the level. So, for example, what I would interpret, assuming matched timeframes, as consolidation at support is A, some sort of spacing between touches, and B, market structure being indicative of the opposite direction, right? So if this is resistance, acts as resistance, right? Then comes into it, makes a higher low, again, pushes into it, makes a higher low again, and this type of structure, that'll be more bullish than bearish, right? Because market structure is being quite key, supply is being exhausted at the level, and dips from this is the more important bit. The dips that are coming from resistance are being bid, and they're being bid higher, right? What I don't see as consolidation resistance is looking at the same chart. You have market come into a level, right? Comes into the level, and then just starts moving sideways for a bit, right? Maybe even breaks down, retrace, etc. This tends to be an amazing sell setup. When you get the test of resistance, the break in market structure and retest, that ends up being an amazing sell. So although just like from an eyeball point of view, this and this may look the same, they couldn't be more different, right? So just to be clear, and a final point to make, to summarize, if I'm going to argue consolidation at resistance bullish, consolidation at support bearish, there needs to be A, some spacing between touches, and B, clear market structure shift happening at the level itself and coming off of the level itself in a way that's somewhat spaced out, right, as mentioned. The final point I'll make about this is that even if you might have a bias with regard to, okay, this consolidation at resistance is bullish or consolidation at support is bearish, using that information and turning it into a trade is a whole different thing entirely. And that's one of the bloody difficult things to do, because if you want to act on it in its most kind of base or primal form, you end up buying resistance or selling support. And I'm someone who's literally tried to make, or in the past had, a setup that was based basically on this, buying resistance and selling support, and it just lost money over time. There are times in which you just selling support makes sense or buying resistance makes sense in anticipation of a breakout. My personal view is it's based less on price action, market structure, etc., but based more or find success more often when it's based on time frames, right? So kind of a daily bearish chart, and you end up selling hourly resistance, hourly support as your entry, or a high time frame bullish chart, and you end up buying lower intraday resistance as your entry. In those cases, it makes sense. This may provide useful information, especially from a trade management point of view, but as a trade entry technique, for me personally, it's far less compelling. Have I answered any of your questions there? I don't use Elliott waves, and I can't comment on whether they work because I don't use them, I don't understand them. Danny says we answered the question. Awesome. ETH BTC, it bounced, and it bounced from a level we talked about on stream. Wow, that sounds so larpy. We talked about this on stream, look, it bounced. Doesn't mean shit. I have a more specific claim to make, that we talked about this kind of candlestick formation here, which is really important. So whenever the market does something like this, where it has a really nice level, right? So this kind of swing point here, really nice. And then there's the wick portion and then the body portion, right? If you look at the wick, the structure is far less compelling, right? If you look to the left, there's really not much going on there. But if we look to the candle body, we can start to see we're coming into an area more so, especially if we move a bit to the left, of prior lows and prior highs. It also just suits my bias because I use candle bodies, not candle wicks for most of my levels. So what you'll see a lot, or what's worth being aware of, is stuff like this. And I think we literally talked about it one-to-one when we had this sort of close, whereby you have, on a fast move down, overly eager or early buyers stepping in at the first possible level, which would be obviously the swing high. Let me just draw that slightly more cleanly. So you have early bids at the swing high, the kind of greedy entry, or the faster moving entry, if you will. They get some sort of positive feedback. in the form of a weekly close above the level, so that looks prime for reversal, right? It bounced off the high, closed above, fantastic, send it. But for me, the real level, or real support, is actually on the close and slightly lower down, okay? And instead what happens, those early bounce players who likely had their stop below the low of the week or thereabouts, they get washed out when price actually tests support, and then you get some sort of push or reversal higher, okay? But with regard to where ETH/BTC is right now, I just look purely technically, it's a rounded retest of broken resistance turn support, so it looks good, right? It's just at support. I think it's likely that we float down and retest this level again. I generally don't think or don't like when you get like a quick wick and then immediate reversal. Just those setups tend to not work as well. In my opinion, I like price to actually base and form some sort of structure at the level itself and make it look like it's going to break and then reverse, rather than just give you this wick and run type of thing. A recent example, Paul says, does XBT funding rate influence your bias? Sometimes. I don't have enough of a systematic view on it to give you a very concise or well thought out answer. But if I'm positioned one way in the market and funding isn't at an extreme which doesn't agree with me, then I may reconsider. So if I'm really bearish at a level and funding is very negative, for example, right, historically negative or whatever, like at 10k, I might think, right, this might be an early / the wrong entry, for example, right? So it might influence my bias in that sort of way, but it's not like a kind of checklist thing. Jawad, I believe I've answered your question. I don't use Elliott waves for trading, and I don't know if they work or not, or any of that. We're 9 likes away from 200. Would be very grateful for your support, and thank you for all the support so far already. But yeah, ETH/BTC support, right? Weekly structure is holding. But with regard to using this and using it to inform my kind of Bitcoin Ethereum trades, as mentioned on Casual Friday, I will only really use ETH/BTC in this way when the market cycle is bullish. So if I have a positive view on Bitcoin and a positive view on ETH, I just think, you know, the number go up, I may look at ETH/BTC and see whether I will prefer longs in ETH if ETH/BTC looks strong, or favor Bitcoin longs if ETH/BTC looks weak. But if the market's kind of chopping or I'm unsure and whatever else, I won't develop new trade ideas based purely on how ETH/BTC looks. Certainly if I think there's a pullback that's more likely than not to happen, in those types of circumstances, I'll kind of ignore ETH/BTC entirely. So I think if the market corrects, the relative safe haven is in Bitcoin and in stablecoins. So even if ETH/BTC is setting up bullishly on its technicals, but I favor a downside move, I think that kind of overrides ETH outperformance, and we have a kind of flight to quality with Bitcoin and stablecoins instead. 1 like away from 200, so close yet so far. Yeah, that's ETH/BTC. And we've covered Link, WIFI. I think that's most of it. That's most of it. Any further questions? Thank you, Ken. 200 barrier broken. You guys are amazing. I'm incredibly grateful for your support. Subscribe if you haven't already, by the way. But here to answer questions for a bit as well, if you have any. Hopefully the summary of Bitcoin, Ethereum, etc. is clear. If it's not, you can always replay the video. So that's a plus. And also, on the note of being unclear, Technical Roundup, which I write with the Duck, comes out tomorrow. It's also free and also sponsored by Bybit. Thank you very much. That's technicalroundup.com. Link is in the description. Free newsletter. It's kind of the no fluff, no filler, all killer, whatever you want to call it. You can literally has the trading view links in it, so you can open up the charts and see what's up. It's got a summary and all sorts of cool stuff. So we'd love to have you on that mailing list as well. Roundneck says, when are you coming out of anonymity? I'm not anonymous at all. I've posted pictures and all that kind of stuff, and my name, and yeah, I've got rid of that privilege, unfortunately, some time ago. Okay, well, that's all from me. Newsletter tomorrow and Doc on Wednesday, plenty to look forward to. The support on this stream has been spectacular. Thank you very much for all those seemingly trivial yet important likes subscriptions, and all that fun stuff. Always grateful for your attention and support. If you have any questions, leave them on the video or next week. As always, thank you to Bybit for making this possible. I know it sounds like a broken record, but quite literally wouldn't be doing this without them. So even clicking their links in the description, checking them out, would be of great service to us and to them. That's all from me. Hope you had a fantastic weekend, a safe week of trading, and I will see you most likely for Casual Friday. Take care. Goodbye.